do you get the money you need to buy a business? Well, that's exactly what we're about to decode during today's training. I'm actually going to talk about a lot of different options to even get 100% of the money you need to buy a business. Look, when the economy changes, a lot of businesses go up for sale, and a lot of people jump in and want to start a new business, but there's a shortcut. By buying an existing business, you oftentimes can get into a business that's already profitable, that's already netting you cash flow, that's already giving you a paycheck, and doesn't give you all the headaches and nightmares of trying to get a business off the ground. Look, I could do an hour's worth of training on all the benefits of why you want to consider buying a business versus starting one, but more than likely, the fact that you're even here watching this training means that you're already considering buying it. You just need to know how to get the money to do so. So let's dive in. There's a lot of different ways to be able to get the money you need to buy a business. Let's talk about them right now. So the best way to get the money you need to buy a business is through SBA. As a matter of fact, it's so common that in a lot of cases, when you have businesses that are up for sale on major websites that list them, they'll even tell you if the business itself is SBA pre-qualified. It's such a common way because SBA can actually finance upwards of 90% of the money that you actually need to buy the business. 90%. So if you can get 70, 80, 90% of the money you need to buy the business from SBA loan, then it opens up the door, makes it way easier for you to be able to have the seller carry a financing or note for the rest of the financing, or tap into a lot of the other options I'm going to give you right now as well. So SBA loans are the #1 way to get money to finance a business. Like I said, as a matter of fact, a lot of sellers get the business set up to be SBA qualified to make it easier for you to do so. Now here's a problem. SBA loans require you to qualify. You need to have good personal credit, and the business needs to qualify as well. It needs to have tax returns that are consistent or even have increasing revenue. The bank statements need to be in order. The structure of the business, the fundability of the business needs to be in order. So you need to keep this in mind when you're looking for a business to buy. You want to particularly look for businesses that are SBA qualified. If they're not, it gives you a huge advantage in the negotiations because just by them not being SBA qualified makes it harder to get the financing to be able to buy that business. So look for an SBA qualified business and consider an SBA financing to be able to get approved, because when you do this, you can get upwards of 90% of the money you need to buy that business. But even if you get that 90%, where do you get the other 10? Well, of course, you can come out of pocket with that. Not a bad idea if you want to front tens or even hundreds of thousands of dollars in some cases, but there's a lot of other options as well. Another option is to have the seller carry their own note. Now, oftentimes the seller will finance part of the business for you, 10, 20, 30, even sometimes 100% of the business for you, which means you can go to the actual seller, give them terms where you're paying them monthly on a regular basis, even giving them a large down payment and paying them monthly, and they're happy at that point. So maybe that covers all the financing or some of the financing. Maybe you get SBA financing for 80% of the actual financed amount, and then you have the seller carry a note for the difference. Now they're getting the money they need right away from SBA, and they're actually getting recurring money coming from you paying that note. Look, seller-held financing is very common when it comes to actual purchasing of a business, and a lot of sellers are willing to do it. It's just a matter of how much they're willing to finance. And that's why financing like SBA works so well, because they'll cover such a large amount of the purchase price that oftentimes the seller's more than willing to carry a note for the difference. But even if the seller's not willing to carry a note for the difference, there's a lot of other ways to get the money that you need to be able to qualify. And here's the best part. It's the business itself that can be used to qualify for a lot of those funding options. So look, there's 3 main ways to get money for a business, and that's based on credit, cash flow, and collateral. So let's just take a look at some of the assets a business may have that will help you get the money you need to buy it. If the business has regular and consistent cash flow, then there's all types of cash flow financing you can tap into using the cash flow as collateral to get part of or all the money you need to buy that business. So just because the business has consistent cash flow, that opens up funding options for you. There's also all kinds of assets that the business may have where you're able to borrow against those assets to get the money you need to buy the business. So some of those include equipment, inventory, real estate, even account receivables where they let their payment customers pay them on terms. With all of these kind of assets and many more, you can leverage the assets of the business you're buying to get part of, if not all, the money you need to actually buy the business. There are hundreds of ways to get the money you need to buy a business, but what I just went through in this training are the most common ways that work the best to get the money you need. So consider SBA financing. Consider tapping into the assets of the business, whether it be the cash cash flow, the real estate, the account receivables, the inventory, the equipment, the other assets the business actually has. Consider seller-held notes where the seller covers part of, if not all, the financing themselves, and you're paying payments to the seller instead of coming out of pocket with cash. You also might want to consider tapping into some of your own personal assets. Remember, cash on hand is one. You can also leverage stocks, bonds, 401ks, IRAs, any asset that you may have as an individual or for another business. Leverage those to get part of, if not all, the money you need to buy the business. And when you start stacking these strategies, you get an SBA loan and then borrow against business assets for the rest, or you get the money that you need using your own personal assets and use stocks and bonds and get a credit line against your stocks and bonds, still keep them invested, earning money in the stock market, and get a low interest credit line that you need to buy part of, if not all of that business. And then again, have the seller carry a note. Using a combination of these strategies is the key to successfully getting the money you need to buy a business. So do you want to learn more? Well, give us a call for a free finance assessment. On that free finance assessment, we can talk to you about all the options you need. We can even run through specific scenarios with you on how to structure the deal to get the money you need to buy the business. Look, we specialize in helping business owners get the money they need to acquire a new business with little to no money out of pocket. So if that's your goal, you want to buy a business and you want to put little to no money down, even if you have barriers like this is the first business you've owned, you don't have good personal credit, we can still have a lot of solutions to help you put together and structure a deal to get the money you need to buy that business. So give us a call for your free finance assessment at 877-600-2487. And by the way, if you got value from this training, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.